Good morning and welcome to the Daily Wrap from Pepperstone on Thursday the 29th of June 2017. I'm Darren Sinden. Without further ado, let's take a look at overnight changes, any price moves that we need to be aware of. Two things really stand out to me today. First of all, the new big figure in cable, 129. I haven't seen that for some time. And also the big move yesterday in dollar CAD, a 1.2% move, something we haven't seen on the exchanges generally for some time. So volatility appears to be making a comeback, if only selectively. As far as the calendar is concerned, what are the events that may move the market today that you need to be aware of? Well, let's take a look. The calendar's really broken up into three key areas. Firstly, this morning we have data from the UK, consumer credit for May, mortgage approvals for May, two items that will be on Mr. Carney's mind after his recent comments about the growth in consumer credit. And then later in the morning we'll have data from the EU, services and consumer confidence and industrial confidence. And perhaps most importantly of all, as far as Europe's concerned, some inflation data out of Germany, and those data are expected around 12 o'clock GMT or 1 o'clock London time. And then half an hour later we'll have data from the States, initial jobless claims of course, but perhaps most of all this GDP data out of the US. It is obviously an annualized read, but people will be looking into that and making their own views plain about the dollar. Okay, breaking news. Any comment that's caught my eye? Well, let's see what there is. First of all, China's yuan rises to its strongest level against the US dollar since November 9th last year, as Xi Jinping arrives in Hong Kong for the 20th anniversary of the territory's handover from the UK, says the FT. Overnight, Japanese retail sales and UK car production data were released. Both showed a decline in May. And also overnight, but in the US this time, shares in JP Morgan, Goldman Sachs, Citigroup and Morgan Stanley all posted good gains after passing the Fed stress test, and in all 33 out of the 34 banks involved passed. So what does that mean for the US banking sector? Are the good times back for banking investors? Well, the likelihood is that those banks that passed will start to increase their dividends and add share buybacks into the mix to keep shareholders happy. And as we can see from the chart here, Citigroup, the line in blue, has started to outperform the S&P, the line in green, on that news. So Citigroup up by 0.95 last night, and some of the other banks are posting 2 or 2.3% gains as well. So food for thought, something for you to take away into the trading day. And today we're talking about US interest rates. US interest rates are being seen as staying static over the summer months. No changes forecast by the Fed funds futures until after the September meeting at the earliest. And you can see the breakdown here. 81.6% of positions in the Fed fund futures for September suggests that US policy rates won't change from the current levels of 100 to 125 basis points. And only 18% of positions in the Fed fund futures suggest there's any chance of a raise by the September meeting. Please take a look at the risk warning. If you're in any doubt about the risks involved in trading CFDs or FX or margin, then please contact your Pepperstone account manager. Thank you for your time, and we look forward to speaking to you tomorrow.